Have you ever really thought about money? Not what it buys, but where it comes from. Who creates it? Who controls it? You work, you earn, you save. But something doesn't feel right. Prices keep going up. Debt keeps growing. And no matter how hard you work, you never quite catch up. This is the untold truth about the Federal Reserve. How it was built in secret, how it controls your money, and why it was never meant to serve you. The Federal Reserve, or the Fed, is the central bank of the United States. It was created in 1913 by the Federal Reserve Act after a secret meeting by private bankers on Jekyll Island. Despite its name, the Federal Reserve is not truly federal, and it holds no reserves. It's a hybrid part government, part private cartel, and it operates independently from the President, Congress, and you. A small group of elite bankers and politicians came together to create a system that would protect the biggest financial interests in the country under the illusion of public oversight. Today, the Fed's job is to control the money supply, set interest rates, and supervise and regulate banks. To understand what the Federal Reserve has become, we first have to understand what it was meant to be. In 1913, Congress passed the Federal Reserve Act, following a series of devastating banking panics, especially the Panic of 1907, when the entire U.S. financial system nearly collapsed. The goal was to create a central banking system that would make the economy more stable, more secure, and more flexible. The original purposes of the Federal Reserve were: 1. To prevent banking panics. Before the Fed, if customers lost confidence in a bank, everyone would rush to withdraw their money, causing that bank to fail. The Fed was designed to stop these domino effect collapses. 2. To serve as a lender of last resort. When banks were in trouble, the Fed would step in and loan them money to keep them afloat and protect the public from mass bank failures. 3. To provide an elastic currency. That means the Fed could increase or decrease the amount of money in circulation, depending on the economy's needs. A tool for economic balance. 4. To stabilize the economy. It would adjust interest rates, monitor financial health, and act quickly to avoid massive booms or catastrophic busts. 5. To regulate and supervise banks. By overseeing bank activity, the Fed was meant to enforce safe and sound practices in lending and investing. 6. To clear payments and checks. The Fed created a national clearinghouse so banks could settle transactions faster, more securely, and more reliably. It sounded good on paper, a central force to keep the system stable, a watchdog to protect ordinary people from the chaos of unregulated banking. But over time, the Fed became something else entirely. Now, let's look at who actually runs this system today. So, the Federal Reserve was created to stop bank runs, stabilize the economy, and protect the public. But today, the Fed has become something far more powerful and far more dangerous. It no longer just manages the currency. It creates money out of thin air, not backed by gold, silver, or anything tangible. With a few keystrokes, the Fed can inject trillions of dollars into the economy. This isn't your taxpayer money. It's digitally fabricated credit, loaned to banks and institutions at near zero interest. You pay full price for loans, cars, mortgages, and education. Isn't that a great deal? The Fed is the engine of inflation. By printing more and more money, it erodes the value of the dollar in your accounts every single year. It's no longer just a stabilizer, it's a market manipulator. Money is created out of nothing. When the U.S. Treasury needs money, it issues bonds. The Federal Reserve buys those bonds using money it creates from thin air by simply entering digits into a computer. That money is then given to commercial banks, and they lend it out to you with interest. This is called fractional reserve banking. Say you deposit $1,000 in the bank. The bank keeps maybe $100 in loans, out the other $900. That $900 gets redeposited and loaned again, over and over. Your $1,000 can become $9,000 or more, all debt-based money. The more people borrow, the more money exists. Almost all money in circulation today is created through debt. In 2008, they printed billions to save the banks. In 2020, they printed trillions, sending asset prices soaring, while everyday Americans struggled to afford food, rent, and gas. These people don't give a fork about you. The Federal Reserve has become a tool of debt slavery. Almost every dollar in circulation is born from debt. To keep the system alive, we must keep borrowing from banks that profit and from a Fed that expands the debt endlessly. The Fed no longer protects you. It manages a system designed to extract from you. It has become the most powerful unelected institution in America, and most people don't even realize it. You've probably asked yourself, why does everything keep getting more expensive? Groceries, gas, rent, medicine, college, year after year, the cost of living rises, but your paycheck stays the same. So what's really going on? Prices aren't going up. The value of your money keeps going down. When the Federal Reserve prints more dollars, every existing dollar becomes worth a little less. It's basic supply and demand. The more of something there is, the less it's worth. This is what we call inflation, and it acts like a hidden tax. You don't see it on your pay stub. It's not voted on by Congress, but it silently erodes your savings, your income, and your future. And guess who benefits? The wealthy, of course, because rich people don't hold their wealth in cash. They hold it in assets, stocks, real estate, and companies. Things that rise with inflation. So while you're struggling to buy groceries, their assets are gaining value simply because more money is being pumped into the system. And who gets that new money first? Big banks, Wall Street, and corporations. They get early access to lender's credit, while the rest of us feel the pain months later through rising costs. It's a rigged cycle. The Fed prints money, the rich benefit, and you pay slowly, silently, constantly. The Fed doesn't just create money, it controls the rhythm of the entire economy through interest rates. When the Fed lowers interest rates, it encourages borrowing. People take out loans, businesses expand, the stock market rises, everyone feels rich. But when the Fed raises rates, borrowing slows, mortgages get more expensive, credit card debt rise, investments shrink, and the economy can grind to a halt. The Fed has engineered every boom and bust cycle for over a century. Think about the 2008 financial crisis. Years of low rates helped inflate a massive housing bubble. Banks made risky loans. Wall Street gambled with debt. Then the bubble popped. Millions of Americans lost their homes, their jobs, and their savings. And the Federal Reserve, it stepped in, not to help you, but to bail out the very institutions that caused the collapse. Trillions were pumped into banks. CEOs got bonuses. Stock markets recovered. But the everyday people, aka peasants, were left to pick up the pieces. This is how control works. They push the accelerator, then slam the brakes. And every time, the rich come out richer. So who keeps the Fed in check? The uncomfortable answer is no one. The Federal Reserve is not part of the executive branch. It's not controlled by Congress, and it's not answerable to voters. Yes, its officials are nominated by the president. Yes, they testify in front of Congress occasionally. But the Fed operates independently. Its decisions don't require approval, and it's not subject to regular audits like most government agencies. To make it worse, there's a revolving door between the Fed and Wall Street. Fed officials go on to work for mega banks, and bankers join the Fed. It's a tight circle, one that has its own priorities, and you're not in it. Can you think of any other institution that can create trillions of dollars, move markets, affect interest rates, and alter global economies with zero democratic oversight? The power of the Federal Reserve doesn't stop at America's borders. Because the US dollar is the world's reserve currency, other nations depend on it for trade, investment, and economic security. So when the Fed prints trillions, it inflates prices worldwide. When it raises interest rates, developing nations go into debt crises. It's not just Americans who suffer. Countries in Africa, South America, and Asia all feel the ripple effect of decisions made inside a boardroom in Washington, D.C. This global leverage gives the Fed immense influence in oil prices, international trade, food costs, and global debt markets, and yet, no other country gets to vote on it. You were never meant to understand this system. They want you chasing that meaningless paper all your life without asking why. But now you know where your money comes from, who controls it, and how the rules are rigged.